Good morning all and welcome to this morning's video. So this morning I have four pairs on watch and those are euro dollar, pound yen, Aussie Kiwi and pound Swiss. So my favourite of the bunch, all pretty good, all looking pretty good these, but my favourite of the bunch, just really from a positioning point of view, is euro dollar and a few other variables. Euro dollar on the higher time frames, we can see that we have this area of value here where volume was built and we had a sell off from that area. What happens? We come back up and we near miss to that area. When we near miss to it, it's likely that we'll come back to take out the high that we near missed to, partly because many of the people who started selling here would have put their stop losses above this area, meaning that there'll be even more volume up there. Okay. And often we see a clue as to if we're going to move up to that area by way of a reversal structure like this. Okay. So euro dollar has historically provided very clean structures. And sure enough, we see that 1, 2, 3 with a 1, 2, 3 middle section. Okay. Usually we do break above these areas of value by a little bit more if we're going to move to the downside, if it's a higher time frame liquidity point, rather than just kind of slightly wicking above it. But when we've had a near miss to this high and we've wicked through a high which is sat below it, if you see what I mean, we've kind of done enough because we've yes, we only kind of wicked slightly above the ultimate high, which was the start of all of this, but we wicked completely through the high sat just below, and then we completely retraced back below not just that high but the high below. So I'm satisfied that we've washed out enough liquidity here to send price to the downside in my experience. So we have the washout candle here, big wick, and then we move to the downside. Okay, bit of indecision here, but that's what I was anticipating based on where we were positioned on the lower time frames for the reasons expressed in yesterday's video. But if we drill down, okay, we've lost internet connection here by the looks of it. Let's just wait and see if that comes back. If it's going to come back. Okay, so in my experience, there we go. It's come back, right? So you can see that we have the impulse correction continuation. So the market has already shown its hand by way of this consolidation. I wasn't looking to trade that yesterday. You could have got in there, but this was definitely a much higher risk position by virtue of the fact that, what's going on here? By virtue of the fact that this wick here could have acted as the base. So you could have been tagged in, tagged out, and then priced to something like that to form a bull flag to push higher because of the fact that we had this sharp move here, implying that there may have been liquidity there, a lot of liquidity, especially when it's the retest at the back end of the previous structure. So I wasn't interested in taking this higher risk position, especially as we're also trading into that. You could just be tagged in, tagged out. If people are seeing this as support and they have their stop losses just below, then you could have been tagged in and tagged out. So what I was waiting for is exactly what we've got now, okay? I was waiting for a break below to confirm that this wasn't some kind of bull structure to push higher, like I've just illustrated. And if we just zoom in, what we can see is we can see that we've broken below this sharp move here, implying that there was not enough liquidity there to send price to the upside. And you can see that we have left a footprint. Okay, so we've left a footprint here, a sharp move. We've kind of gapped to the area. Okay. Well, we have a series of near misses, so we kind of narrowly missed it. If we just zoom in, you can see we narrowly missed that. We then narrowly missed it again, and again. So where do you think when all these people were selling here, where do you think they put their stop losses? I'm pretty sure they put it in this area. And if they're seeing this as resistance now, many people trade in support and resistance. I'm pretty sure they had it above here and potentially above there as well. So I'm not surprised that we've come down to this area and we seem to be moving back sharply, probably because price needs to tap into that area for it to be able to move to the downside, because after all, this price is actually the mid price of the bid and the asks. Okay, where are the orders? If it's going to move to the downside, it likely needs to take out these orders to be able to continue on its journey. Okay, because there's orders sat up there that are dragging price back up. So with all of that in mind, what I'm going to be looking for is I'm going to be looking for, okay, what's happened here? Let's get that off. Whoops, I didn't mean to do that. I'm going to be looking for a 3-touch 1 hour continuation. Okay, so a minimum of, we've got that now, a minimum of 6 corrective 1 hour candles. And then we would have that 1, 2, 3. If we get that, I'll be looking for a risk entry within the structure after a rejection candle. Okay, and then I'll be able to manage it even just down to the low there for 2.2%, down to that low, which I don't think holds much weight by this point, for something in the region of 3. And my target would be down there for something in the region of 12. This is the profit potential is not why this is high up on my list. That's actually not a concern when I'm, we're risk managers. I'm concerned about which ones allow me to manage my risk with the greatest amount of ease. But regardless, I would measure from the range. So from the range that we just tapped into down to there, I would set a take profit at the 90% area, where price can often pull back deeply, even if it's going to continue in the forecasted direction. And then I would trail my stop loss accordingly. Okay. So hopefully that's nice and simple. That is euro dollar. I've got an alert set there. Pound yen. So pound yen, if we just zoom out, what's happened on pound yen? You have to zoom out to the weekly to see this, but we had this high here, where last time around there was an extremely aggressive sell-off. Okay, so it was the start of this kind of structure, this steep structure there, which had a middle section in it. Okay, we have an extremely aggressive sell-off from there last time around, implying that something similar might happen next time around. Okay, and if you're thinking to yourself, why is it broken above? Well, this is a lot of the time, this is just people that don't understand price action. Okay, so they think it's going to the moon. Euphoria kicks in. You see a fake sell-off here, which could have been a move to the downside. Okay, but it didn't commit. Okay, we didn't get any correction afterwards. Instead, price just broke above, and you can even see on the weekly, you can even see elements of this 1, 2, 3, 1, 2, 3. Usually the continuation leg out is of a similar length before it completes. Sure enough, that's the case. So, and look at these, I've touched on this before. Look at all these low momentum candles. When you see all these low momentum 1 hour, well, this is actually the daily chart, but when you see all these low momentum candles like that, that's often a clue that this is not the bigger players as such, just people getting them that don't know what they're doing, getting themselves caught the wrong side of the market before that happens, which is what we see in the majority of cases. So you can see, before I even zoom in, you can see that we've had an impulse correction, continuation, impulse correction, impulse correction. The market moving nicely in a typical sequence, and we're now trading back below this high here, and back below all of these highs as well. And what do we have? We have a near miss to here, and another near miss to here. So the base of this structure is here. If people were buying, where are they putting their stop losses? Likely down in this area. So there's likely a lot of stop orders there. If people are buying here, they're likely placing them down there. So if we tap into my lower time frame area of value, then price will likely gravitate down towards these areas to take out where all those stop orders are. Okay, it's not hunting stop losses, but price needs to take out stop losses a lot of the time for it to be able to move in one direction or the other, because those orders are either dragging price up or down. Okay, so if we just zoom in a little bit, what do we have here? This would be a bit more visible on the 1 hour chart, but sure enough, we have this structure here. Okay, so we can, it's a bit of a subjective first touch, but I'm not really concerned about that because it's not really relevant to this trade idea. But we have this structure here. We have the middle section. Okay, the 1, 2, 3. We tap into that area. What do we have? A near miss to that high. What do you think people were doing when they were selling here? They were likely placing their stop losses just above here. And if they believe that support is resistance once it's broken below, they likely see this, some of them, as resistance now. So there likely would have been orders just above there. Sure enough, it taps them and moves to the downside. So what I'm looking for in this instance, because this is a slightly steep structure, okay, the gradient is slightly steep, and because there is a little consolidation sat just above here, and we didn't quite tap into that, I'm not going to be looking for a 5-minute continuation. I'm not looking for a push down and a 5-minute continuation, because you're more likely to be tagged in, tagged out, and then price taps into that area that it kind of near missed to, and then we move to the downside. What I'm going to be looking for is slightly more deliberacy, and that is specifically a 1 hour impulse down. We've almost got that now. I'm just looking for a little bit more of a push down, and then I'm looking for a tight 15-minute continuation, and then I would look to get short on the break or within it. Okay, and in this instance, we would have about 3% to work with to that low, and then about 6% to work with to there. Okay, price likely would keep going, but when it's the case that we've got a 5% or more, I use the mechanical management. I measure 90% of the range, and I set a take profit there, and I trail my stop loss accordingly. So that's what I'm going to be looking for from pound yen, and I've got a Google Calendar reminder to remind me to check this periodically now that we've kind of tapped the area of value. Okay, and setting an alert is not relevant anymore. So that is pound yen. Aussie Kiwi was one which I wasn't going to put on watch last night, but it's not the prettiest, but there is context behind it. Okay, so Aussie Kiwi, the story as I see it. Okay, we have this high here. What happens? We near miss to it. Where are the people likely placing their orders when they're selling here? Likely up here. Okay. What a lot of people do as well, just to touch on it, a lot of people think, oh, I'll wait till it gets to this area. It doesn't quite get to there. It starts to sell off, and then FOMO kicks in. So these people start selling, and they think, oh, it's okay. I'll just have my stop loss just above there, and then I don't need to wait for it to get there. Okay. FOMO. Okay. And then sure enough, we have another near miss here to this high. Sure enough, it taps into the area. We have a failed buy structure. Okay, so I talked about previously how when we get these failed buy structures, so you can see here that we kind of had this bull. This could have been a bull flag to push higher, an impulse correction continuation. When these structures fail, because as I've often said, nothing happens all of the time and nothing happens none of the time. The sell-off and the bailout, most likely as fear kicks in, as these buyers realize this was not what they thought it was, tends to cause very aggressive moves to the downside, and you can see evidence of that here. Okay, these are just little things I've picked up along the way. What I like about this now is that we're trading well and truly back below all of these highs. Okay, suggesting that a move to the downside to potentially take out this low and this low may be imminent. Okay, maybe we're going further. We don't need to know what is going to happen next to make money, as you'll know if you've read Trading in the Zone or listened to Trading in the Zone as I have on Audible. What I like about this is yesterday's daily close. What is this candle here? We wicked, we pushed price pushed to the upside, okay, and it retested the back end of this and then closed back below it, suggesting that this was a washout of the liquidity that was sat just above here from people that sold here and likely believed that this was now resistance, and they stuck their stop loss orders just above. Okay, so as I zoom in, you can see that we're getting momentum now. Before I even zoom in, there's, what do we have here? It's the same stuff over and over again, folks. Look at this structure here, right? Where do you think, when people were selling here, where do you think they were putting their stop losses? Likely in this area, okay? We didn't break above. That is a slight negative. We kind of wicked to the area, okay? But there would have been stop loss orders in this area when people were selling here. We come back up, we tap that area, and then we get the aggressive move because that liquidity has been taken out, okay? Yes, we didn't tap. Yes, we wicked to the area and not through, which was a slight negative, but price has now shown its hand because we've had a correction afterwards. So this is the mark. This is likely people stacking their orders for the next wave to the downside. So any chance of a wick fill here, because we wicked to and not through, has just been mitigated because we've had the impulse correction continuation, confirming that we don't need to come up to there, okay, in order to move in the forecasted direction. I like the fact that we've got the mini head and shoulders pattern there, specifically because what we typically see is the right shoulder breaking just above the left shoulder if we're going to move to the downside. So that box has been ticked. Okay, and what I like about this, if we just zoom in, is that we have what happens. Price broke the low of this structure and it left a footprint. Okay, so we have this high here. We tapped. We did tap that area, but we didn't break above it. And specifically in this case, it's more likely that price will move to the upside to give us that 1, 2, 3. Because if people are selling here and they're selling here and they believe that support becomes resistance once it's broken below, where are they going to think is a safe place to put their stop losses? Just above here, because they now see this as resistance. So if we tap into that area to give us that 1, 2, 3, we'll likely wick do something like that to tap some of those orders, and then we would have that 1, 2, 3 structure. Okay, so what I'm looking for from this pair today is the following. Where's my forecast gone? Okay, let's zoom out a minute. So what I'm looking for in this instance is the following: a 3-touch 1 hour continuation. We've almost got that now. All we need is a push to the upside, and then I would look to get short in the break for some, and I'll be able to manage it down to the low of the structure, something in the region of 3, and down to there we'd have 5.99. And once again, I would measure the range if I'm allowed to do so. It's not working. There we go. So I would measure the range. What would I have down to there? That would give us about bang on 5. So my minimum for using the mechanical management tool is 5. So if I couldn't get 5% down to there, depending on the size of the stop loss, then I would actually just target that low instead, set my take profit there instead, and then trail my stop loss accordingly. Okay, so that is Aussie Kiwi. So why is that not disappearing? There we go. So I've got 4 minutes to break down this last pair. I am trying to do shorter videos, but there's a lot of detail. There's 4 pairs I'm watching, a lot of detail I need to go into on these. So pound Swiss. Okay, this is slightly lower down. This is last on my list because we're positioned more deeply into the structure, further down into the structure. Okay, and also the sequence. That's not a typical sequence, but you can see that we're in a run of momentum now. We're completely broken below there. And what I like about this is that we have the origin of all of this move, which was here. Near miss. Where did a lot of these people place their stop orders? Likely just above here because they believe, that is a safe place to do it. We tap that. Price comes up. We have a failed buy structure. Remember me saying a moment ago that these failed buy structures, when they don't commit to the upside, okay, where we had the continuation, when they don't commit, the runoff tends to be very aggressive, and so we see that again. So what I like about this is very straightforward. This one, we're trading well and truly back below these lows. Okay, price corrected through this low, and you'll see that as I drill down. So it didn't find liquidity there to send it to the upside. What I'm seeing is this is just an impulse correction continuation to take out this low, okay, which this low near missed too. So if people are buying here, where if some of them put their stop loss orders down to here, so if we tap my area of value, we'll likely find our way back down to there. So if we just zoom down, you can see, oh, look, what do we have? A structure. We have that 1, 1, 2, 3. If I just zoom in, you can see what happens. We have this little consolidation here. Price drops out. It leaves a footprint. It moves down. Near miss. Where are these people likely placing their stop loss orders? Just above here. Okay, what happens? We tap that area. The price doesn't move to the downside. It doesn't fully commit because it comes back up. Why has it come back up? It's likely come back up because we only tapped this area and we didn't break above, especially when we've got a little bit of a consolidation sat just above. So it likely needs to tap above to tap those stop loss orders, or potentially tap into this consolidation to be able to move to the downside. So with all of that in mind, what I'm going to be looking for with 1 minute to go of this video, let's have a look. So I'm looking for a tap into this area of value. I'm not looking for a risk entry, even though we kind of have that 1, 2, 3, because there's a consolidation sat just above. Okay, so we could easily tap into that area. So if I was to take a risk entry here, I could easily be tagged in, tagged out, price taps into that, then moves to the downside and then does this, and then you've taken an unnecessary loss. So what I'm looking for specifically, when there's a little consolidation or a hook point set just above, I always wait for a tap into the area of value, followed by a push down and a 15-minute continuation, not a 5, just waiting for a little bit more deliberacy because that sat just above. And then I would look to get short on the break or within it. And then I'll be able to manage this trade down to this low for something in the region of 3.5%. And in this instance, I wouldn't quite have 5% depending on the size of the stop loss. So what I would actually do is I would target that low down there for something in the region of 7%. And then once again, I would use the mechanical management tool and I would measure from that range down to there. I'd set the take profit there and I'd trail my stop loss accordingly. Okay, how many amateurs do you think have such a concise plan as I do? Probably not many. So you have to be prepared in this game, and that's if you treat trading like a business, it will pay you like a business. Okay, and that's all I'm trying to do. I'm not trying to be right, not trying to be a show off. I'm just trying to show you what I'm looking for and show you how you need to behave as a trader. Have a great rest of your day. Speak to you